All right, welcome back to the final round here on Yahoo Finance. It's time now for our call of the day, and today we are talking about Deutsche Bank's latest note on shares of Amazon, the firm raising their price target on the stock to $4,000 per share. They've got a buy rating on the stock, and the title here, Shauna, says it all: 2 trillion reasons why we like Amazon shares at this valuation. $4,000 a share, Amazon would be worth $2 trillion, and I think sure, why not? What's another trillion between friends when you've already gotten above the $1 trillion market cap level? But I think it's interesting that, and a couple of analysts have said this today, Amazon's quarter they reported last night is basically where Amazon could be in 5 years. They probably won't grow at this rate forever, but they certainly pulled forward a lot of demand and in very analyst speak type language said, well, here's what your margins would look like at size X.
Yeah, but I think that the fact that Amazon is where we are headed here in the future, I mean, Deutsche Bank laid it out in one of the first lines of this note when they said that Amazon is dominant. They're utterly dominant here across two of the biggest secular trends of our lifetimes. And that really just highlights the strength and the dominance that Amazon plays right now in the story, but also where its place is going to be in 5 and 10, even 15, 20 years from now, because it's hard to imagine a competitor here that could be as big or as dominant in so many different industries than Amazon is at this point. I mean, you can make the argument that Apple has that in its space, but two extremely different companies, obviously. So the race to 2 trillion, I think it's on. It's hard to bet against Amazon getting there at some point. I think the question is who will be the first company to do that, whether it's going to be Apple or it's going to be Amazon. But when you look inside this report, I mean, you can just see how strong Amazon is at this point. I think we all knew that the pandemic was accelerating this adoption curve specifically for e-commerce, but Deutsche Bank put a number on it. And they were saying that they estimate that we saw 4 years of growth in 4 months. So if you take a look and drill down even deeper into some of these numbers, the Prime members, that's a very sticky part of their business. Growth accelerated there. Renewal rates were very strong. People are watching even more Prime Video, a very, very small part of their business, but just speaks to their strength here across so many different categories with viewing hours. I think it doubled from a year ago. So talking about just how quickly some areas of their company are growing. Grocery business, another huge standout here during the quarter. Their sales in that division tripling. The fact that they also upped their delivery capacity by over 150% clearly is a very, very strong quarter for the company. But the question, of course, is how much of this sticks going forward. And on the call, Amazon did address that a little bit. They said that the strength that they saw in the second quarter is carrying over to the current quarter. Demand is still super high. So I think a lot of these changes in behavior that we're seeing from consumers, while it might not be as strong or at the levels that it's been over the past 4 months, I think people are going to change the way they behave. And Amazon is one of those companies, along with a handful of others, that are going to benefit from some of the shifts that we are seeing because of the coronavirus.
Yeah, just to chime in on Amazon, you guys, look, first of all, obviously, a profit doubled. I mean, doubled. And this is in spite of Amazon, remember, last quarter announcing $4 billion in COVID-19 related costs and investments. And I believe only $2 billion of that was spent last quarter. And now what they announced for this quarter is the second half of that $2 billion will be spent this quarter. But my goodness, the profit. I mean, it's a monster. And it's funny to me, Miles, sorry to shame you yet again for this take from months ago. I should forget it and get over it. But you recently telling us all that you think that the shopping experience on Amazon has gotten so clunky and it's very hard to search for things. And I have not found that. I have not experienced that. And it sure looks like most people, either if they've experienced that, they don't care or they haven't noticed it. But the most important thing I'd point to from Amazon earnings, which I think makes this upgrade make a lot of sense and, you know, no brainer, the job creation, 175,000 new jobs created since March. I mean, my goodness, look at all the other companies during the pandemic shedding people left and right, and Amazon adding 175,000 people. And I think what's interesting there is just optics wise, and you can say that reputation maybe doesn't matter so much for what the regulators will choose to do or not do, but it seems like it matters a little for the public discourse. Reputation wise, that's a big positive. I mean, Amazon can say, oh, everyone's talking about how big we are, how powerful we are, how evil we are, but you know what? They're creating jobs amid the pandemic at a time when everyone else is shedding people. So that just really stood out to me.
Dan, Amazon thanks you for that message. And I would just note that the point of the hearing on Thursday or Wednesday is that the shopping experience on Amazon sucks. That was the point. This was brought up many times by many lawmakers, so I will defend my take on the grounds that members of Congress also think that being on Amazon is not a pleasant experience for consumers, even though people go there. They only go there because it's their only choice. All right, we will adjourn that until a later date. All right.